retail banks and investment banks in America. And we've got Goldman Sachs coming out in a few minutes as well. We've also obviously got today, we got retail sales data, we've got the trade data as well, and we've also got University of Michigan economic sentiment and consumer sentiment later on. But first up is the retail sales data and Goldman Sachs numbers. It's been a very, very busy week. We started the week with this hotter than expected inflation CPI data out of the US, which has helped lift this rally we've had in the dollar. And that's continued with the Fed minutes later on in the same day. The Fed very clearly now have taper Fed have taper very much in line for this year. It looks like a $15 billion taper to the $120 billion that's they're currently investing in the US economy. So they're going to start tapering it by $15 billion, or appears to be $15 billion a month. That would suggest an 8-month taper to get rid of it. That takes it to what Jay Powell suggested it would be the middle of next year. Obviously, the other big story, as I said earlier, is the CPI story. But remember, the Fed are more in tune with the CPE numbers. I know it's a sort of a splitting hairs a wee bit, but really the CPE is the one that most of the Fed members are looking at. And again, this argument about, is the inflation transitory or persistently transitory? What was the phrase they used? I've already tried to write it down. Persistently transitory, whatever that means. It's an oxymoron. But others, some economists and analysts are saying it's just a temporary blip because of all this massive injection of liquidity because of the COVID crisis. And others are saying, well, it's more permanent. We got oil at $80 a barrel. There was a note out this morning from TDS Securities talking about $100 a barrel for Brent if we get a very harsh winter. Historically, oil prices tend to stick. I mean, obviously they vary around quite a bit, and they do come down. But the impact of high oil prices tend to stick around for a long while. And the other impact this week in the CPI data from the US was this fact that the big factor of it was rents. Rents, again, they're not the sort of cost that comes down typically. Landlords very, very rarely bring their rents down. So all of that adds to the persistence potentially of this inflation. As far as markets are concerned, we've had a very strong dollar. We've had a particularly weak yen. Equity markets have been under pressure, but they bounced very aggressively yesterday on the back of the earnings from the big banks. And also yesterday we had the other big issue that the central banks are all looking at, and that's unemployment and the unemployment rate. So the weekly claims yesterday was significantly better than expected. It came in at 293,000. That's under the 300,000 level for the first time in the pandemic for the last 18 months. So I think it's a 14th of March 2020 low for that weekly claims number. It's still about 50,000 above normal economic cycle, so it's a very positive number. So we had that. We had the strong earnings numbers from the central banks yesterday. So we had a significant rally on that. And then also yesterday we had a weaker measure for the producer price index. Although earlier in the day we had a record number out of China for its producer price index. But there was a weaker number out of the US yesterday, so that helped equities rally very, very significantly yesterday. And we see, let me just bring the charts up. Let me just get me doing that. So this is the USA 500, the biggest stock market, global stock market. I mean, it's a huge rally yesterday, biggest move since March, through the 20-day moving average here, through that resistance at 4,400. And we went through the 50-day moving average just a wee bit, but we did close right on it yesterday. So see if this breakout is going to obviously persist. Didn't last time, as you saw here, back in the end of September. We had a similar sort of rally to the 50-day moving average. Couldn't break it and came back down. So we've been bouncing between the resistance here at 4,445, or 4,450 really, and the support we've established here in the end of September, beginning of October at 4,300. So we've just been oscillating between that as far as the S&P 500 is concerned. And so we're stuck But big strong day yesterday. Over that 20-day moving average for the first time since we broke under it here on the 10th of September. So it's a big 23-day down move, and that's come to an end now. We're back over the 20-day moving average, and as I say, most significantly over the 50-day moving. So it's be all key where we finish today. Obviously, the next resistance is back at those all-time highs at 4,500 and 4,550 as well. So retail sales to come. See where that goes. But really, the big move has been on the yen. The yen, another strong day for the dollar here, over 114. And we went as high as 114.45, I think, earlier. There we are, 114.37 there. That's a 3.5-year low for dollar, 35-month, not 3.5 years, 35-month, 36-month high for dollar yen. And yen's weak across the board, and that's continued into the US Open by the looks of things. We're sort of stopping out there. So 114 itself, the round number, sits just about there. There we go. 114. You see that? There we are, 114 on dollar yen. Sterling continues to hold the bid as well. The best performer against the dollar is sterling. That's simply because the expectations have been heightened quite significantly. That the Bank of England might even move rates, not only cut their taper, but actually move rates before the year end is out. Lots of issues in the UK around driver shortages, staff shortages. Again, obviously a global issue, but it's compounded by the Brexit situation, or the sort of fallout of the Brexit situation for the UK economy. So, some action maybe having to be taken by the Bank of England on the back of that. So we shall see. Alex is saying, good afternoon, Alex. Strength in dollars. Yeah, the dollars, is on the bid. I mean, it's rolled over a wee bit today. This is the dollar index on the 1 hour time frame. See here today, we've just sort of been going sideways. But if we take it up to the daily time frame, we've still relatively well bid. Let me take some of those slides off there. Those indicators. Clean it up a wee bit. There we are. You see, we had a big move. We're over, went to 94.50. It's not on this chart, but there we go. 94.50 up here. And we bounced off it, so moved down significantly earlier in the week on Wednesday. We shook out a wee bit as the gold market moved. I'm sure we're looking at gold in a minute. We'll come to gold in a minute, but a big down day for dollar index on Wednesday. But we're still holding that key 20-day moving average, which is there. We tested it again today, actually, there at 93.82. So relatively weak for the second half of the week for the dollar index, but needs to break under this key level there, 93.82. So can it hold the psychological 94 level dollar index? Remember, the dollar index is a composite of 6 currencies, euro being the biggest significant currency in that sector. Let me just make that a yellow light so I can see it. I'll come back to it next time. Not dark, great. So I made that 94. There we go. So as I say, a minute or so, we've got the data, so I'll come back to the data in a minute. We'll have a look at gold. Takuzad. We'll have a look at gold in a minute. Bank of England not going to increase rates before May 2020, says MHP. Well, we'll see. We'll come on to that. Gold fell. Everyone's saying hello. Gold is going to continue to fall. Well, let's just have a quick look at gold before the data comes out. Gold, remember, has been pulled sideways and because of the conflicting data that's been coming out. The thing that's supporting, let me just zoom this up. This is the daily for the gold market. So zoom this out so we can see it a wee bit better. There we are. So the thing that's been supported. So here we were moving very much sideways before we had this big blast on Wednesday. So the sideways action was supported down here around 1750. The things that's been pulling gold. One is it's a non-yielding asset. So as the yields were rising, that was putting pressure on gold. So we drifted down all of September. We've drifted sideways this first half of October so far. The thing that's given the gold price a lift, particularly on Wednesday, was this ramping up of expectations of inflation is actually is going to come home to roost with that big spike in CPI. Obviously, they're missing the PPI. Yesterday cooled us as we ran to 1800. We couldn't hold 1800. And today we're moving back down again as the dollar gets some strength and the inflation story continues to spin. So it's an inflation hedge. So if inflation is going to go up, gold tends to go up. But if yields are high, that pulls the gold price down, so gold will come down. So we've got this contention that's going on at the moment. So that's why gold's really been going sideways. So we've got this volatility where we haven't got anything significantly in demand, in control. So we got the bears on one side, we got the bulls on the other side, and so we're trying. Had a big move up on Wednesday. We rallied to 1800. Couldn't hold over the 200-day moving average today, and we're back down again today, and we're currently trading at 1771. So all sorts of things going on. So let's just have a quick look at the data as it's come out. Retail sales was the first heads up today. Where have I lost my calendar's gone all up squiffy. It doesn't come through actually. Let me just refresh it. Goldman Sachs data's through. Trading revenue better than expected. Significantly better than expected. 2.5 billion for trading revenue for Goldman Sachs, and it's expected 1.95. So another strong headline figure for the retail banks. So retail sales have risen by 0.7% in September after a negative expectation of a fall of -2%. So that's a strong retail sales number. So the shoppers are back in the US, if you read the headline number. So let me just run through all of this. So it's a big, strong US number. That would be particularly strong for the dollar. So, this pressure here, this is the daily time frame of gold. You see gold will have moved quite significantly on that. There we go, 15-minute or even this 5-minute one. So an immediate leg down for gold, certainly. So euro will have pegged down as well. Here's euro on the 1 hour. Let's look at that 5-minute chart until that news is broken. There we go. We're moving down. So let me just quickly run through the data. So retail sales is expected to slip 0.2%. It's coming at positive of 0.7%. So that's a big, near 1% variance and above what was expected, and then in line with last month. And last month's data was all revised higher as well. So the headline 0.9 from 0.7. The control group up to 2.6 and 2.5, and the key core number is up to 2% for last month. And this month it's coming better than expected as well at 0.8% compared to 0.51%. So that was expected to be positive anyway, but it's coming not as positive as the headline number, but big beat for the headline retail sales number. So that's a positive tick for the US economy. Whether that feeds into the jobs or not, I don't know. As far as import and export prices are concerned, the import price index is up at 9.2% compared to expectations of 8.1%. So that's another beat. And imports also, where's my import number? Sorry, the exports 16.7%. So exports have missed, imports have beaten. So we got this demand from US consumers getting driven by imports getting pulled in. So, there was an article in the FT today talking about the restriction from Nagel, one of the big freight forwarding companies, talking about 584 container vessels are currently stuck outside of major ports. And one of the biggest bottlenecks, one of the oldest ports, is Los Angeles, and there's 15 ships stuck outside there. Remember, these ships have, on average, about 21,000 containers on them. So it's an awful lot of goods stuck outside of ports. And then on top of this, we've got this, particularly in Europe, we've got this problem of haulage drivers, the lack of haulage drivers. In the UK alone, the haulage industry reckons there's about 100,000 haulage drivers missing. Combination of Brexit, where European drivers went back home, and also the COVID lockdown, where drivers weren't getting tested, not tested for COVID, but tested to actually pass the exams to actually be a haulage driver. Guys were retiring, young people weren't coming into the business. Wages have been pressured over many, many years. So it's going to take a long while for that to turn around. So, the bottlenecks we keep seeing on the news are going to continue certainly for a year or two, at least one would assume. So, lots going on, lots of positive dollar data. That was positive dollar. Where's where's my calendar gone? Positive dollar data there, the last big data dump of the week. A very busy week it's been indeed as well. Negative on one, and finally a negative tick has come from the Empire State Manufacturing Index. That's missed. That's coming at actually under 20. It's coming at 19.2. Sorry, no, I can't read that properly. 19.8. It was expected to come in at 27. It was 34.3 last time. These sentiment indexes are notoriously volatile, but that's quite a significant miss as well. 19.8 compared to 27 expected. So New York State manufacturing perhaps not as perky as some other parts of the economy, perhaps being impacted by those export-driven misses as well. So we'll see how that all pans out. But at the moment, we got a stronger dollar. Euro's turning around here a wee bit. That was dollar. That's a euro. There we are. Euro positive. So let's have a look at some of your questions here. Good afternoon, everyone. Where am I? Let's see if there's any questions over on Facebook. I'll come to that in a minute. Right, who is here first? Right, let's just go through these in order. Because Alex was saying about strength of the dollar. Well, it was the data was relatively positive, although euro here is picked up from the initial move down. Again, it depends how you want to interpret this. The market is now, I say, pricing in the Fed to start this taper, possibly as early as middle of November. Announce it at the Fed meeting of the 3rd of November, and start as early as November, and then run for 8 months if indeed it's going to be 15 billion. It may be less than that, maybe more than that, but that's what it's looking like, a 10 and a 5 combination on the dollars they spent. So Dakazu's asking about gold. Let's go back to our gold chart. So gold continues to track low. It's ticked up a wee bit here on that data coming out. But again, this is the 5-minute chart for gold. That's down. Today, we've been tracking lower. So again, that's just trending lower. It's gone all the way into its 200-day. Sorry, not its 200-day. It's 200-hour moving average here, which sits at 1770. So 1770 is support today. It's been tested already in this hour. It seems to be turning around a wee bit now. These Fibonacci levels you can see here on the side of the chart here, the 61, 50, and 38, they come from this daily time frame here, this sell-off here. So we've moved down, this big move down here from where we were earlier in September to the floor in September, from 1835 down to 1720. Now we've bounced off that, so we're moving up a wee bit from that. But these are these levels earlier in the week. There we are, and we've come back through that now. So today supports at 1770. We're way below our 20-hour moving average. It sits up there at the 61.8 fib level at 1790. So again, a huge move back down this time for gold. So it'll be interesting to see if we get back to this congestion level we were in earlier in the week at when we were pivoting through 1760, 1765 level. We've already had quite a significant move, but we're just $10 shy of that at the moment. So a weaker gold market today. MHB, Bank of England not going to increase rates before May 2022. That's we'll see what happens. MHB, that's your opinion. That's fair enough. That markets tend to get ahead of themselves. So when the chatter starts that the Bank of England is going to start raising rates by the end of the year, the feel of the UK economy, the feel of the people in the UK. You listen to people talk about their economic circumstances. That's going to be a very, very harsh move, and I can't see the Bank of England actually doing that. We've got tax rises coming in April. We've got a potentially very hard winter in the UK because of the rises in the gas and the oil and the coal prices. So massive energy crunch in the UK. On top of that, they already had, as I was saying, these shortages of goods in the shops. The supply chain's hitting the UK particularly hard. So for the Bank of England to actually move to increase rates to try and stem this rise in inflation, I think before the end of the year is a bit ahead of themselves. Well, who knows what might actually happen, but certainly we'll see. May, possibly MHB. We'll see how it goes. Gold really fell. Yeah, but as we say, we've had a strong week. We rallied up. right through that psychological 1765, which is where the 20-day moving average was. We went right through and rallied further to 1800. Again, it's like a big magnet drawing it towards these big round numbers. But then we've bounced off that today. It's weakened quite significantly. So whether it's players bagging some profit of this big move today, big move on Wednesday, thinking it couldn't hold, given that the inflation story is increasing. So the argument is that the worry about inflation is perhaps outweighing this rally in the yields, and the yields have cooled quite a bit as well. So, I'm just looking at the revenue numbers coming through from Goldman Sachs. Revenue was up at 5.6 billion compared to 4.1 billion. So Goldman Sachs, another US central bank that's having another US key investment bank, is having a very, very strong third quarter by the looks of things, much better than anticipated. So one would expect futures to be up on that. And indeed, that's the daily futures. But today, that's just the lift we've had this hour is probably based on the positive retail data and that Goldman Sachs number more than anything. So again, it's breaking out. This is the 1 hour today, so it's breaking out this little range we've been in today. So 4,450 futures trade at the moment. So futures up and moving forward. Ariane, good afternoon. Or good morning or good evening. I don't know where you are in the world, but hope you're staying safe. And if you've got anything we want to have a look at, please let me know. Alex, is gold going to continue to fall? Well, it is as far as this setup's concerned. If we look at today, the hourly chart, I don't know what time frame you're trading it, but many traders that have traded this short today would have been happy to see it hit the 200-hour moving average and might have closed out. It's Friday. We obviously still got the whole of the US session, but that's trended nicely. But again, just stay calm if you're trend following this. This is short. There's no need to bail out yet. It's going. Will the 200-hour hold as a resistance? It has so far, but the trend remains to the downside. Vicky, gold long run support and resistance. Vicky, long run support. We've just been through that, but let's do it again. Why not? So resistance for the gold chart in the long run, so daily time frame, has resistance at 17.95. Technically, the 200-day moving average sits at 17.95. That's $5 shy of the big fat round number 1800, which we ran to yesterday, and it looks like we're getting a bit of a star formation here. A very small doji style candle yesterday, following a big up candle on Wednesday, and at the moment we've got a big fat body down candle on the daily time frame today. Can't decide what to do with that because it hasn't finished yet, but that's potentially forming a key pattern, but we can't make a decision on that or comment on that until it's actually finished. So we're down today. As far as the daily support's concerned, well, for me, the first support is that 20-day moving average, which now sits at 1760. So we've got resistance at 1795. Support at 1760. Below 1760 is the intraday lows we've been testing so far in October, which takes us down to the 1750 zone. 1750, 1745 is our support. Key initial support is 1760. Resistance 1795 and 1800. That's those long-term areas. If you want to go higher time frame, Vicky, if we got to the weekly, you can see 1800 is the big key resistance, and the big fat support is at 1750 for the last 4 or 5 weeks. So $50 channel on the weekly time frame for those higher time frames. I guess that's what you were looking at. Gold is falling, is indeed. It's going down. Becky, good afternoon to you. I'm late to enter. It's okay, my friend. Don't worry. There's no such thing as being late. Anything you want to have a look at? Ask. Alex is saying he's short gold. Well, that's what the trend is also suggesting. Oh, my friend, Gia, Omar, need revenge for gold. Don't ever try and revenge trade, my friend. The worst thing traders do is get emotional. They get excited about money. They get excited about winning. They get depressed when they lose. The worst thing you can do is bring emotions into your trading room. Keep them out. Don't use the R word. Get rid of revenge. If you win, you win. If you lose, you lose. Keep it simple. The trick, it's not a trick, very, very simple rule. Keep your losses small. It's very, very easy to say, and it sounds a bit pat me saying it's not here now, but keep your losses small. If you're only going to lose 1 or 2% of your account every time you lose a trade, you stay in business a lot longer than you do when you're using 10 and 20% of your account every time you trade, regardless of the size of your account. It's much easier though, guys, to trade with a big account is with a small account. But more on that in one of our webinars. But do invest as much as you can, but never ever invest stuff you can't afford to lose. Alfred, good afternoon. I hope you're well. Anything you want to look at, let me know. Alex, hold till 10. Sorry, Alex, you're saying you're holding it for 10 minutes. Oh, 10 p.m. 10 p.m. Sorry, 10 p.m. So you're holding till Remember on our let's just go to the daily time frame. On the server time, remember the US market closes at 11 o'clock, so 2300 hours. So if you're going to hang it on till 2200 hours, that's all well and good. I mean, it's Friday night, guys. The weekend's here, so what a lot of traders do, what a lot of professional traders do, is sit their stop loss, high enough away from the current price action to know that, well, if it gets hit, that's okay. But it spiked me out, but that thing's happened. I've still made a profit. So, if you've been following this strategy this morning, you would have triggered short, or the system would have triggered short for you here, right on the open here, around 2 o'clock or 3 o'clock candle there. That's gone short there from doing nothing yesterday, as it had gone. Well, we'd had a nice rally, hadn't we? It had gone to 1800, then it, as you might expect, got to 1800, got a bit overbought, and we just slipped sideways. The MACD was starting to come down. See how the signal line was starting to trip down. The histogram candle, histogram bars were shortening. So the trend was ticking over. We went under short here at 2 o'clock, and we've just been short ever since. So at the moment, we're hearing this now. You want to count back 1, 2, 3, 4. Your stop loss needs to be round about up there, 1786, and just let it come down as the trend comes down. This isn't going to go on forever, and there will be profit taken. There's obviously been clearly some profit taken as we've got to the 200-hour moving average here today. So whether it keeps going till 10, Alex, or not, I don't know, but that's continuing to weaken. For me, the data was dollar positive. Here, the gold started to move up, we're starting to move down again. So we'll see where that goes. So that continues to move down. Oh, 10 a.m. Oh, right. Okay. Alex, you're confusing me, my friend. Where are you in the world, Alex? Because you're talking about 10 p.m. or 10 a.m. 10 a.m. US time. All right. Well, that's in about an hour and a half, isn't it? We've just had, it's about 8:30, 8:45 in the US. So best of luck, my friend. Good evening, Gajpasand. How are you? How's your weekend going? Omar, you got this. Okay, that's very good. Is that directed at me or somebody else? I don't know. Okay, right. I'm just going to leave you guys here on. I'm not going to leave. I'm just going to go over to Facebook, see if there's any of our comments or colleagues over on Facebook, because I can't share the Facebook comments. And no, indeed, there is not. Okay, the biggest social media platform, but we've got nobody there. Hey ho, what can we do? Right, so let's have a look what's going on elsewhere. So dollar index continues to hold up. So we've spiked up and come back down on the data coming out, but that's can't really get excited about that. We're under 94 at the moment. We're at 93, 96. So 94 is a key line in the sand as we go into the weekend and the close. The 200-hour, interestingly, sits just above there at 94.05. So a bit of a sideways action. Excuse me, my voice is going. So dollar in the higher time frames remains relatively well bid. As I said earlier, we had that big shakeout on Wednesday as the oil price, as the gold price rallied. I'll see what's going on. Surin's saying here, very good. Surin, nice comment, my friend. I guess everybody obsessed about gold. So let's do that. Corin's saying there's retracement on the lower time frame. So let's just go back as we're here to look at the live charts. Let's have a look at that. So 1 hour's down, Surin. Yep, that doesn't. Okay, so let's step down. 30-minute. That still looks like that's going. 30-minute traders. We've reached, tested, and broken now the 200 period moving average. Now we're and that was 2 candles ago now, and that's continuing to decline. RSI on the 30-minute is way over, well, not way oversold, but it's oversold, but it's been oversold since 10 o'clock this morning. So what? It's still trending lower at, RSI here is under 13 now, and it's continuing to move down. MACD still with you to the downside. ATR's moved up, it's $3.50 on the 30-minute, so that's still moving down. 15-minute is still moving down, consolidated leg down here at 230. Surin, my friend, I don't see any retracement here. 5-minute, 5-minute. You obviously get more. So consolidated there, it's consolidated there. But the last 10 minutes, it's moved down again. Again, another one that's, it's less overbought. The 5-minute chart is less overbought than the 15-minute chart. The RSI sits at 20 there. So that still looks like that's still legging down to me. I'm not going to get too excited about getting out of that because that's moving down. Even your 5-minute chart, even since I've started blethering on this afternoon, how long have I been going? What time do we start? 20 minutes, 15, 20. Yeah, we've been short since I've started talking there on a 5-minute chart. So there, and the 1 minute might be showing a bit of resistance, but not really. So it's down, it's looped, it's down, it's looped up. But it's there. There you see, even on that 1 minute chart there with those fractal highs, the last 1, 2, 3, 4, 5, that's been pretty confident. That's broken that resistance there. See the little channel we're in there? Your 1 minute chart traders. See how that resistance there was lower than this resistance here. So that's a trend, my friends. We rallied up. Now we went down. That formed a floor. This is how to trade this short-term, chaps, ladies. We formed a floor there. So we rallied up, and that high was lower than that high. It was the floor of that channel. We couldn't get into that channel for 5-10 minutes. Then we legged down again. Then we triggered short here. Again, just using this simple crossing strategy here. That went short there at 15.49, and we've been short for the last 1, 2, 3, 4, 5 minutes. And we're going lower. We went short to 17.71, and we're currently trading at 17.67. So there's there's $4 for you on your gold chart in the last 5 minutes. So that's continued to trend down, my friend. Alex, what do you think of the news released today? What news? Which news? Well, that's what I'm here for. That's what I was talking about. The retail sales is positive. It's come out better than expected. The trade balance is mixed. We've got this split between imports and exports, which is not unusual. But what the trade data is showing is that the import prices were weaker than expected, and the export prices were higher than expected. So there's obviously demand from the US for importing goods, and as demonstrated by all the obviously the supply bottlenecks we're talking about. So clearly, that would suggest that the moving forward of the US economy again. The only, the mixed number or the weaker number would have been the Empire State number at 19.8 compared to expectations of 27, and it came in at 34.3 last time. So it's a big down step. But that number in particular can be quite volatile. Those Empire State and Richmond State and all the Philly Fed manufacturing numbers. Yeah, I mean, the news this week, though, overall, not just today, Alex, the news this week has been dollar positive. We've had we had the, psychological, we had the weekly claims under 300,000 yesterday. We've had these big positive numbers out of the US investment and clearing banks. And then that's been followed through today with Goldman Sachs on the coattails of the 4 big ones. Also posting better than expected earnings. And it's not just the banks. I mean, we talk about the banks because they were the main, really, it sort of only started Wednesday when JP Morgan reported. But other companies that have reported thus far have had some really good numbers. Well, Pepsi a few weeks ago. There were some, obviously, caveats about future outlook. Nike and I can't remember, I think it was DHL or one of the couriers, were a bit more sanguine about the outlook. Obviously, the retailers, particularly, maybe under pressure. But really, the data has been very dollar positive, which is why the equities have not dollar positive, but dollar positive as well as US positive as well. So the yield has weakened a wee bit this week, but we're still relatively elevated compared to where we've been. But in historical terms, we're still very, very low at 1.5 for the 10-year. But there was that split also in the week where we saw the yield curve flattening, where the worry about inflation spiked. So that typically means that the short-term yields start to go down and the longer-term yields start to go up. So the 30-year went up, the 2-year, the 5-year started to go down. So we've got this flattening of the yield curve. And so that worry disappeared. So if that's gone, oil, that's why gold rallied like it did. Now we've got this massive rally in the commodities. We've got this huge run up in the oil market, supported by this big drawdown we had in huge drawdown we had in inventories where it went down. That should pressure the price, which it did, 6 million drawdown. But the worry about other energies has pushed the oil price up, because we've got things like the futures market for coal in China still very, very high. It's rocketed in 2021. It's rocketed in the last few months. But it's a massive spike in natural gas prices. And so that means lots of burners of fossil fuels have suddenly started turning back to oil from coal. Regardless of the obviously the environmental issue about burning fossil fuels, unfortunately, they're going to be around for a while. We can't suddenly switch everything off and move to environmentally better forms of energy. But it needs to happen. For all of our futures. So it will happen eventually. But at the moment, energy stocks, energy prices look relatively cheap. I know it might sound a bit odd, or energy companies, but again, oil back to $80 a barrel adds to this argument about inflation. But anyway, Surin, it's okay, my friend. There's no need to apologise. It's just what you see. It's what we see on the chart. Okay, guys. Don't listen to noise. Don't listen to guys like me. Watch the videos. Watch the guys on the internet and Twitter and everything. But trade your own time frame. Trade your own assets. Make sure you have a strategy. Make sure you have an approach to trading. This particular setup you can see in front of us is a trend following setup. And it looks great when, we've got nice trends like this and this. But when we're going sideways, the moving average don't do anything. It's you're getting chopped in and out of trades. But you never know it's going to happen until it happens. But this beauty of a trend following is when you're in it, you just stay on it until it starts to tell you it's run out of steam. So there we go. Oil moving. Oh, this is gold still, isn't it? So it's the 1 minute chart now. We've got a bit of resistance. Let's go back to the 5 minute. Yeah, 5 minutes. So we are possibly finding 5 minutes showing a bit of a tick up. 30 still red, 15 still red, but we may be finding some support around 1765, possibly. I don't know. Let's go back to that minute chart. So the minute price has bounced the last 3 minutes while I've been leathering on at 1764.78. That's our low so far today. We've bounced off that for the last 3 minutes. Again, that minute you'll be closing this out now. That short there, that'd be the rule, because we're back up the 9 period moving average there. So we would have got in up there at whatever it was, and we've lost a few pips on that way. We lost $4 on the way back up, but certainly gained more than that on the way down. So it's a positive run. Alex, woo, hit my target today. I'm out. Good. Alex, is that your weekend done? Is that your week done? You're done? You're out? Thank you. Bag it. Off you go. Enjoy. Sharon, good afternoon. Hope you're well. Hope you're staying safe. Anything you want to have a look at, let me know. So let's get off the gold chart. Let's see what else is going on elsewhere. So Euro, we had a look at earlier. So we had this bounce. This is Euro on the 5 minute chart. So the data came out at here at 30. So we went down initially. There we go. Typical sort of odd move. So we were trending lower, turned around, but even on the 5 minute chart, classic, ran to the 200 period moving average, found resistance, turned around, and then legged down. And here we are, lower than we were when the data came out. So down we move to the downside. So 115.91. Let me just put 116 on there, because obviously there's a big key psychological round number at 116. There's 116. Make that a bit bigger so we can all see it. I forget this is before platform. This, ladies and gentlemen, sorry. So I expect to be able to see what's going on there. There we go. So there's 116. Get that a bit thicker so you can see it. Make it yellow. Let's make it yellow. So there's our 116, which we broke earlier today, up it, and then we ran to resistance at 116.03, and then we're down, and we're down again. So we've gone lower. So again, the 5 minute Sorry, this is the 5 minutes, not the 1 minute. So the 5 minute chart is down. 15-minute chart is still down under that 20 period moving average there, moving down. But there we go. It's in that 200 hour again, bounced off it. So is this going to move lower? We shall see. MACD still moving down. RSI sort of bouncing. Looks like it's turning around a wee bit. So a bit of support for 15-minute time traders there, where that sits there. That should support there on 15 minutes, 115.92 as we move down. So still looks pretty weak to me. Lots of more questions coming in. Who's next? Dollar rand 4-hour chart. Dollar rand. Have I got it here? I should have it here. Dollar rand daily. Well, this dollar rand had been in a very big downtrend and then a big uptrend through the summer in August, September. So we rallied back to over 15. And now we've moved. We obviously found resistance at over 15, 15.20 it was, wasn't it, here? And now we move down. So, interestingly, the weakness in the dollar, which, ironically, has been exaggerated in the emerging markets. It was the other way around. It was the emerging market currencies were getting clobbered a bit more than some of the other currencies, but they've come back a wee bit. So, dollar rand here on the daily time frame went under its 20-day moving average here for the first time here earlier in the week on Wednesday. Okay, having been under it, so again another rally. So we'd had a rally here from the 16th of September right through to the 13th of October above the 20-day moving average. We peaked at 15, 20, 25 and then come back down. So that's gone short. It's under its 200-day. That's the brown line on there, the golden line. And the 50 period, that's the blue line on there. So we've got the 50-day moving average, the 200-day moving average, which was a big fat support, which is why that yellow line's there at 14.75. That was the big support, and we're sort of pushed through that this week. So as you can see, this provided a level of resistance as we were going up in September. And it took 3 or 4 or 5 days before we broke away from it here on the 24th. I see how we rallied away for the next 3 or 4 days, but then rallied to our top. Didn't get as high as we got in August, but then come back down, and that's support until yesterday, basically. So we're broken under that. So that's the daily. So the 4-hour will be more exaggerated, and the 1-hour will be even more exaggerated as well. So I would say it's short on the 4-hour, and indeed it is. So that would have chopping, very, very choppy. But again, using this setup would have been short here earlier. So the 4-hour would have gone short here earlier on the 12th, in fact, before the end of day on the 13th. Is that the end of day on the 13th? But went short there. So that's short. And now we've been under its 200 period moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Big down leg today for dollar against the rand. So rand's having a better day. Under that key 1475 level or 1474 level, I've got it on here on this particular chart. But that's remained short. So next support would be 14.600 to the downside. And that's from that break there on the 12th of October. So that remains short. It's gone under there. Where's our next? A bit of zoom. There you can see how that's, so that line, you might get a bit of support before then. There, let me just put that in for you. So the rand has support going back to this taking all the way back to September. Excuse, that's a big thick line. So 1469, what's that? 1462. So call it 1463 to round it up, and 14600 is the support area. So so that strong, good US data today hasn't really helped the dollar rand. The dollar's down here in this 4-hour candle. So that remains to the downside, my friend. Let's see who's next. Alex saying this week. This is gold chart. I'll answer your question. Surin's asking about, can you look at yen? Well, look at yen. I mean, man, my friend, it's just going. It's going. This is a 36, 35, something like 35 months, 36 months, or 3 year, close to a 3 year high here today on dollar on the yen. If we zoom in, you can see this is a big rally. This is a 1 hour chart, but let's keep the same detail. We go out to the daily time frame. You can see what a rally it's had. Lots of nothing happening for month after month over the summer, and then we've had this massive breakout over 111. And so zoom up a bit on this is the daily time frame. So lots of congestion here, changing channel. So the longer we go sideways, the bigger the breakout can be. Whatever asset is, whatever you're trading, and that's exactly what's happened here with dollar yen. We've gone sideways, gone sideways, gone sideways. We couldn't get below 109. We couldn't really get over 110.50. 111 was the big one, but certainly 110.50 was breached. And it's just off, it's rallied, it's broken. And obviously when it first breaks out, we don't know that is going to be the case. But again, another one, just trust your system and just stay on the trend, stay on the wave. So the break of the 20-day moving average occurred here on the 23rd of September. So dollar yen has been long since the 23rd of September. And here we are, the 15th of October on an end of day basis. And you're well into the money. We broke at 110, about 110.15. It's retraced a wee bit, breached 112, 200 pips. And here we are at 114, another 250 pips, 220 pips. Big move for dollar yen. Where are we going to go from here? Well, don't really care. I mean, it's going up, isn't it? It looks a bit overstretched. How overstretched are we? Well, the stochastics is overbought. The RSI is here. It's been overbought since the 8th of October, but we've gone even higher since then, haven't we? The breach of 112 has just been followed through, 113, 114. What's causing it? I hear you cry. Three key things that are driving dollar yen. One is obviously dollar strength, and two, or one, not one and two, but one and two is dollar strength and yen weakness. What's causing the yen weakness? Well, it's all to do with the yield differential. The yen is a safe haven asset. We've got a bit of a risk on feel in this second half of October coming in. So that weighs on the yen. We've got this big yield differential between the US and Japan. So there's yields going up in the US, yields not moving in Japan, particularly. So that attracts carry trade traders. And one of the biggest movers this week in particular has been the Kiwi against the yen. And that's because that's a big carry trade, and that is what's happening. So have a look at the Kiwi yen if you want to see some even more exaggerated movements this week. Big 3.5% move for the Kiwi yen. But as far as the yen is concerned, so that's two big things. And then it's this idea of risk on in the markets. That's the other key thing that's weighing on the yen. But it's across the board as well against the yen. The main policy contenders in Japan as well, the Kuroda and other members of the Bank of Japan still talking about stimulus. We've got this new prime minister in Japan as well. Very much, he's going to keep the pump going, priming. That was it's very clear mandate from when he got the job. There was an interview with him today in the FT talking about getting rid of Abenomics. He's moving on. But there's no, as far as inflation in the world's concerned, there's not a lot of it in Japan. So we have this weaker yen currently. So that trend just keeps going. If we go to the weekly trend, see what a big old breakout there. You can see the breakout even more clearly in the weekly trend there as we went through 111 here at the end of September. But the big week was the week before that, 19th of September, and 1, 2, 3. 4 consecutive weeks higher. The candle's getting bigger here on the weekly basis. Obviously, on a weekly, the week isn't over yet, but there's not a lot of the week left as far as the weekly candle's concerned. Look at the size of it; it's a monster. And it's finishing. We're at the top of our candle. Remember what big-bodied candles mean, and we're finishing at the top of the candle as well. So very little wick to the upside. So we're at these 3-year highs for dollar yen. That doesn't look like it's turning around anytime soon, my friend. $400 now shall be below entry, so I'm good. I don't know what that means, Alex. Floating $400, I don't know what you mean, but well done. You've obviously had a good day, so all the best. Surin, dollar yen, that's what we've just been talking about. Alex, it's only two of you here. There's just you two just asking questions all the time. Don't trade dollar yen. Oh, that's okay. It's all right. We'll talk about whatever anybody else wants to talk about, Alex, my friend. Who's next? What's happening with the Japanese yen? Why is it so weak? Well, hopefully I've just explained why it's so weak. There's three key characters, okay? Let me go through it again. The main driver of the initial weakness in yen is this rise in yields in America. So we got this big yield differential between Japan in particular and the United States. I mean, the thing about Japan is it's a very stable economy. It's a net exporter, so it's a supply economy. So it supplies goods to the world. So a weak yen means good for Japanese exports. So good for the Japanese economy if the yen continues to be. But weakening too far, that adds problems. Even inflation starts getting talked about in Japan. We've had a strong dollar, so that adds. Remember, when you're trading currencies, it's just a pair. So if you've got a strong pair, a strong currency and a weak currency, it's only going to go in one direction, and that's been very clear. This again is the weekly on the dollar yen, so that's added to it. And then we got this idea, we got this change of political setup in Japan as well, added to the mix as well a few weeks ago. That's playing out now, and we got this bit of a risk-on vibe with these very strong. Much stronger than expected, to be honest. Banking numbers, particularly in the last couple of days out of America, and so that's added to the risk-on vibe for equity. So that again, that pressures safe haven assets like the yen, the Swiss franc, and gold to an extent. So we've had so much volatility in gold as well. Okay, that's answered your question. Good day for gold for me today, Alex. Very good. Okay, you sound like you're in a good mood, my friend. Don't ruin it, Alex. If you've had a good day, you've made a good profit, leave it, let go. Okay, if you said 10 o'clock, it's coming early, let it go. Don't bag your profits. But if hopefully you're trading a system and you're trading a strategy. If your strategy or your system triggers on any of the assets you're trading, if it's not just gold, take the trade. If it doesn't, don't. That's the problem. Most people, some strategies don't trigger for a while, whether that's a few days, a few months, sometimes, depending on your time frame, or even a few minutes. If you're a scalper, you've still got to have the same patience and discipline, whatever time frame you're trading. So, best of luck, Emma. Gold. We talked about gold till the proverbial cows come home, but let's have another look at it as you've just arrived. Let's have a look. So gold on the minute chart, there we go. We've rallied up, tried to move up, but more importantly, the higher time frame. So the 30-minute still remains short, quite significantly. It looks like maybe turning around in this current 30 minutes. It's just we're halfway through our current time frame. 15-minute, again, 15-minute looks like the 30-minute there, doesn't it? That's still short. Big down candle in the last 15 minutes for gold. The 1 hour trader, he's still very short. 1600 hours we breached. Look at that. That's a significant breach of the 200-hour moving average there at 1771. We closed the hour 15 minutes ago at 17, where we are now basically 1767. So $4 below at 200-hour moving average. So that's a significant breach. So you're still short as an end of hour trader, my friend. So I don't know what time frame you're trading it, Emma, but there may be some 4 hour again, big down candle. That's just completing now, isn't it? That's three. Or is that should have completed? That should be the 12 till 4 candle, or is it not? No, it started at 1 o'clock that one, so it's still got an hour to run. But again, 4 hour traders, their 200 period moving average is there at 1772. So a weak day for gold, having a strong day on Wednesday. So we're rounding top at 1800. Doesn't look great, does it? Look like we're back into this 1765 level soon. 1750 is the big support. 1760 where we were pivoting through earlier in the week. So I don't know what time frame you're trading that, Emma, but that's certainly still looking quite weak. So, but we looked at Rand. Hopefully you were here when I was just talking about that a minute ago. A new one, Euro Pound, please. Well, again, another one that's been moving down on the basis of a stronger sterling. Sterling's stronger because there's a market sort of run away with itself. MHP, you were talking about Bank of England yourself. So that the Bank of England, again, I said it before, didn't I? Just some swirling rumours, chatter that they may have to move rates before Christmas. I can't really see that happening, but Andrew Bailey's really the only one that knows the true answer to that. So 85.85, key level for Euro Pound, going back as long as the Euro's been kicking around, to be honest. So 85, we're under it today, and we've been under it for 1, 2, 3, 4, 5, 6, 7 days. Big downtrend. triggered here right on the first trading day of October. Big spike high towards the end of September. We went to 86.50, couldn't hold it, ran to the 200-day moving average, peaked down, 2 days, one big day up, 3 days down, taking all of that one big day move up, out of the bottom of there at 85.30, and we've been down ever since. And we currently trade all the way down at 84.38 as I speak. So the current big down candle on this 1 hour, the 4 hour will be just the same. Again, looping lower, under 85, under 84.50 for 4 hour traders. 1 hour traders, keep up, down, up. Didn't want to move to 84.85, and again, that's been short this morning from, what time is that? Let's move that back. So that was a big down candle there at 10 o'clock this morning, having a weak move up in the Asian session. Europe was awake, tried to take it higher, didn't happen. First suggestion was the time before that, and then a big break of the 20 hour, and that's just continued to collapse through 84.50. I'm going to say 84.35 is where we are now, intraday. That's weak. So if we get back over 84.50, that might not be a particular surprise, but there's no way we're getting over 85 before the end of the day, one would assume, unless something significant happens. Mr. Johnson, something happens on his holiday in Marbella, but we shall see. But that's down at MHP. I don't know what time frame you're trading this on, but certainly, as we said, we've just seen the intradays are down, the daily's still down, well down, the 20-day moving average sits there at 85.35, so long way away, 100 pips, full 100 pips from where we are now at 84.35. The weekly, I don't know if you're a weekly trader, but yeah, it's been weak all year basically, hasn't it? There's pick up in the in sterling, at the bid on sterling, so again, it's broken on that. You see how key that 85 level is here on these weekly charts, can't you? So it's significant negative week this week to the downside for euro pound, and that trend continues. So that was euro pound for MHB. Alex, thanks for the advice. Really appreciate it. No problem, my friend. Best of luck. Always manage your emotions, my friend. You sound like quite an emotive sort of trader. You've had a good trade. Don't let it, go to your head. Same with when you lose, guys. More importantly, focus on, managing your emotions. Focus on your losses. Keep the losses small. The winning trades often take care of themselves. Most people do okay trading. The problem is they let their losses get too big. So they have a lot of winning trades. Losing trades tend to lose twice as much as their winning trades. Fact. It's not a made-up number. MHB, is Bank of Japan sleeping hard? 5% currency go down in a week. Amazing. The Bank of Japan are notorious, a bit like the Central Bank of Switzerland, the Swiss National Bank, for interfering is the wrong word, but interjecting when they have to. It has moved very, very aggressively this week. You're right, 5%. I think it's a bit of an exaggeration, 5% MHP. But anyway, it's moved a significant way, certainly. If you go onto our website, I can't share it here because I've got the way I've shared the screen. Go onto our website, go to our traders board. Click on the 5-day move of the traders board, and you see how weak yen has been this week. But yes, it might be to do MHB with this political change we've had recently in Japan as well. That might be sitting on the actions from the Bank of Japan, but we shall see. Euro New Zealand. I'm pretty sure I've got that down here. What Euro Oz, Euro Yen, but not Euro. What was it? Euro New Zealand. I don't know what that here. So look. Yeah, indeed, we have got it there. So there we are. So this is Euro New Zealand. What time frame, my friend? But again, another one that's broken out of a level. This is a weekly one, so it's been going sideways. We had support 165.80, and it's another one with a big down week. So let me zoom out. Daily, very choppy. Lots of lines on here. So yeah, again, another one that's broken a key support this week. Yesterday, whoa, what a day yesterday! So that support we'd had at the beginning of September, the middle of September, the end of September, the beginning of October, has just breached enormously yesterday. So right through this 165.80 level, a huge down candle breaking out, and down we go, and then we've gone down again today. So we're currently trading at 164.30. That's definitely trending lower. I don't think anybody could argue with that. But some choppy sideways action, some big wicks on this pair. Not one I look at all the time, but obviously it's a euro pair. So again, being lower and weaker from that break of that one. Really, there was a bit of support there at the earlier part of October at 166.50. That breached earlier this week. In fact, on Monday. So yeah, it's been a big old down week. That candle we just looked at showed us. So Monday was the first heads up. Tuesday it followed through. We stalled a wee bit on Wednesday, but huge breakdown. I have no idea that was going to happen, obviously, yesterday, but big breakdown for Euro Kiwi yesterday through 165.80 support, and we've breached that. And let's have a look where that's taken us now. So we look to the left. Where's our next support? We can look all the way over to the left. A big trend down we'd had at the beginning of the year took us all the way down to a February low there at 163.45. So that's your next support level. Whether we get that low or not is obviously to be decided, but we're quite a long way there just in 2 days. So we broke the key current support at 165.80 just in one down candle yesterday. So that is probably getting it screaming out like a big magnet, drawing it towards it. 163.50. We currently trade at 164.30. I would say in technical analysis speak, but that's also in common sense speak, isn't it? But that's a big move already. So, and that was an exaggerated move lower. So the area you should also be looking at is where we were yesterday, which is where we stopped, which is, there we go. And we can see that MHB, which is there, these peaks lower. See how that was a wick lower, and it didn't count. That didn't come into play, though, that low on the wick here at the end of March, 17th and 16th of March, where it was just a wick and then we rallied off. But that wick low, the intraday low, has now been breached as an end of day low yesterday. So moving lower is what that's telling me, or that's what's suggesting to that. I don't know what you think, MHB, but that looks weak. The weekly is obviously weak because we've broken out, because that's today. That's where we started, didn't we? It's broken out of that channel, not a lot going on. And the monthly will be a big monthly candle down, yeah. So there we go, taking us back to the beginning of, that takes us all the way back there to April 2019. So it's a big move back to the downside. So questions have dried up. Let's quick pop back to Facebook, see if there's anybody there, and there's nobody there. Let's have a quick refresh of that. Oh, come along, where's he gone? We've got equity traders in here today. Anybody ask about the equity markets? Not even the Nasdaq. Well, where are we? 20. I'll keep going for another 5 minutes till the US Open. Equity markets are likely to, push on. But again, obviously, the data is out now. It's all priced in, so we may have run key day today potentially for equity markets. Let me just check my Facebook. No, it doesn't want to advance. Doesn't want to work for some reason. Oh, I'm sure they'll contact us if they need to. So right, let me finish with the equity markets. Okay, I hope that's. I answered your question, MHB, my friend. So let's go back. So we're 5 minutes from the cash open, and we've had a big, significant bounce yesterday. 1.7% rise in the S&P 500. Nasdaq was similar, and the Dow not quite as hefty. But I know most of you like the Nasdaq. So let me start with the Nasdaq. Actually, Nasdaq's the same. So Nasdaq here, we got this high at the beginning of September at 15,700. We then declined. We went under our 20-day moving average, and we've been under the 20-day moving average since the beginning of September here. The first break was there. The final break that broke away from the 20-day was here on the 17th. So from the 17th of September until yesterday, the 14th of October, we were under our 20-day moving average. More importantly, the follow through on the 20th, the Friday to the Monday in September, took us under the 50-day moving average. The 50-day moving average is that light blue line there on the Nasdaq, which is now coinciding with the 61.8, the magic Fibonacci number. It's not magic; it's just the Fibonacci level of the move down that we had from the high to the low, which is so far the low at the moment at 14,375. That intraday low there from the beginning of October, and we sort of bounced off that. So we're over the 20-day moving average for the first time in a month, but we're still capped by the 50-day moving average. So we need to break that. That's quite a thick line. Not only is it the 50-day moving average, it's that 61.8 Fibonacci level. So we're over the 50 fib level as of yesterday, and we're over the 38 level as we've broken through the 20-day. So that's quite significant. But we'd like to break away from this, 1-2% break from the 20-day moving average, depending on what you're using. If we break the 50-period moving average again, you'd like to see a 1 or 2% break away, and then that brings in these all-time highs again at 15,700 as we run into the year end. Remember, we're into fourth quarter now. We're 2 weeks in to the key fourth quarter, and the earnings season is kicking off. As I say, it's kicked off in earnest. So banks are good. Are the tech companies going to be as good? Obviously, the tech companies that make up the Nasdaq much more sensitive to interest rate rises. The taper is coming. There's no question about that. Rate rises are coming. The market again with the Fed minutes on Tuesday, Wednesday. It was clear that the dot plots now have been dragged forward or back. Depends how you want to look at it. We remember we were in 2023. Last time before the minutes on Wednesday, the consensus was going to be like a December 2022 rate rise. Now it's looking like a potentially September 2022 if things keep going. The hawkish, noises out of the Fed is increasing all the time. So that's will hang on interest rate sensitive stocks like the Nasdaq more than others. So that's the Nasdaq. The S&P 500. I haven't got on my lines on here, but never mind. It remains that's a daily, that's fine. But remains bid. But again, S&P 500 over the 20-day moving average for the first time in a month or so, and just over that 50-day moving average as well yesterday. So a move away from this 50-period moving average at 4,430 by, clearly, a couple of percent, just to get it comfortable break. But we've breached it yesterday, and we're currently ahead. We're at 4,450, a key, again, another big key psychological number as the cash markets open today. So in the positive mode, big day yesterday. Look at the size of the candle yesterday. Huge day yesterday, 1.7%, best day, as I said, since March. And see how the Goldman Sachs data. I think there's not many other companies reporting today, but certainly Goldman Sachs knocked it out of the park earlier. Report next week. Lots going on next week, guys. We got Tesla, we got IBM, Johnson & Johnson, Procter & Gamble, Abbott Laboratories, AT&T, Netflix. Everybody's favorite Netflix. We all Squid Game fans here. Bit gory for me, but Hunger Games. It was a bit more my style, but we'll see. I haven't really watched it, to be honest. I'm just making it up from what the others have said in the office. But Squid Games, massive impact. It's been the biggest initial launch of an original Netflix series in all of Netflix's history. 112 million people are watching it around the globe as well. So that's good for subscriptions, isn't it? Thank you, Netflix. I can't show you Netflix's chart, but the chart wasn't looking too great last time I looked at it. But certainly the impact of Squid Games will have a positive impact if people start to subscribe because they've heard of it, they want to get involved in it. South Korean produced production. So, and then obviously all the other, when these big television events suddenly turn really, really successful, there's all the other merchandise that appears, whether it's T-shirts or obviously these days video games, merchandise, all that sort of thing. The little what's the word? These conferences they have of Squid Game fan people dressing up as the characters in the game. So it creates dolls or whatever it is, but it creates lots and lots of feedback, which obviously all helps the merchandise, all helps the company that produced it and the guy that wrote it. Fantastic story about the guy that wrote it. He had to sell his laptop, $600. Got rejected for 10 years before somebody took it on, and yeah. Anyway, NHP, that's not a problem, my friend. So watch the equity markets, off to a strong start. Final trading day of the year. Let's go back to everybody's favourite, which is gold. What's gold doing? Well, 4 hours still down. The 1 hour is still down. The 30-minute still down. Yeah, we bounced in the last 30 minutes, but we're now into the next 30 minutes. The 1630 to 1700, that's down again. 15 minutes remains red and down. 5 minutes. It's flattening out a wee bit. There we go. 5 minutes. Still short, though. It hasn't broken back under over the 9 period. So, again, if you're using this strategy, even on the 5 minute time frame, you've been short. When's that? Well, you've been short for yonks, haven't you, off this chart, really? You haven't been out of that because we haven't closed back over there. You've been short from there. That was short. Yeah, you're still short. So you're short from all the way back up there. Just follow the trends, my friends. Don't get panicked out. Don't get struck out. Sigurd, thank you. No problem, my friend. No problem at all. I'm watching for free. Yeah, it doesn't cost anything, guys. This is free. What do you mean you're watching for free? Of course, it's free. Unless you want to send me a donation, I'm happy to take a subscription or a donation. Absolutely, yeah. Send it here. You send your love, but send some cash as well if you want. I don't take Bitcoin payments, I'm afraid, but anything you want to send, I'm happy to send it. Webinars at hotforex.com. Yeah, no problem. Right, so where are we? I'm going to go now because it's Friday afternoon and I'm getting tired. So any final requests, my YouTube followers? Let's leave it with gold because everybody likes gold, don't we? We're talking about gold and it's trending really nicely, even for 5 minute traders. So we've got a low of 1764.78 at the moment, and we're currently trading at 1766. No, we're not. We're currently trading at 1767.12, so we're still trending lower. That may be, bit of a stall, but it did it there, didn't it? It did it there. But higher time frame traders still short on the US Open. So take care, everyone. Have a safe weekend, and we'll see you all again next week. Remember, another big week next week. We've got the earnings season. I can't remember what the data is off the top of my head, but Andrews, I'm sure, is going to publish it. So get on our website, have a look at our week ahead for the third week of October, key week coming up as we approach the end of the month as well. So have a look at that. Another week, Evergrande will be very much in the story again. That contagion rollover. Remember, their first payment of their bonds, which they didn't pay, was due on the 29th of September. 30 days after that, they actually officially default. I mean, lots of chatter, but there's also been a lot of quietness as well around Evergrande as well over the certainly obviously over the Chinese holiday period, but certainly not so many significant statements about dollar bondholders. Lots of support for local bondholders, but not any overseas bondholders. So the Evergrande story has got some legs to run, certainly. So have a look at that. Final data today will be in about 25 minutes' time, will be the University of Michigan Sentiment Index. Again, it's a bit like the Empire State that we had earlier. It's a soft indicator, and it can be potentially volatile, but the consumer sentiment, again, how is the US consumer feeling? How is the US consumer feeling about inflation? So there's 2 bits of data coming out in 25 minutes, the consumer sentiment and also the inflation expectations. So have a look at that. And then obviously we round the week off, those of you that are looking at the futures market, with the CFTC numbers as well. Again, big indications on that the dollar strength, euro weakness, yen weakness as well. So that's all being played out as well. So for more on the CFTC and why that's important, watch our Commitment of Traders webinar. So it's the Commitment of Traders COT report from the CFTC every Friday afternoon US time. So take care. I'll leave you with the equity markets. We're up. The Russell's up 1.2%. The S&P is up 0.4 of 1%, and the Nasdaq is up 0.25 of 1%. On the cash session, but as you see on our futures market, it's still trading to the upside as well. So futures are up and the cash session's up as well. So take care, everyone. We'll see you again next week. Stay safe and see you soon. All the best.